How you doing, James? Glad you could make it. For you guys out there who are already here, can you let me know how the mic is coming in? If it's loud and clear, appreciate it. Thank you. Michael, how you doing? Richard Reed, how you doing? Thanks for stopping by this evening or this morning, wherever you might be at. Okay, great. Thanks, guys. Appreciate it. Appreciate the feedback. James Richter, I think it's your first time seeing your name here. Where are you from? Maureen Davis, how you doing? Thank you. Sean, how you doing? So we'll be starting up in just a bit. Polynesian Pip, aloha. Beer guy. Now that's a name. Pretty loud, plenty loud. Okay, great. Thanks, appreciate it. Ron Miz, first time I think I've seen you here as well. Welcome aboard. No, I'm okay. All right, thanks for watching. Okay, so we'll be starting up in just a bit. Apple Valley, Minnesota. You Gophers are having a pretty good year this year, right? Okay, so I guess we'll get started. Hello again, everyone. Welcome to another edition of Silver Bullion Television, SBTV. I'm your host, Patrick Vieira. Glad you folks could make it here, wherever you might be. Go ahead and feel free to let us know where you're from over in the chat box. I see James Richter, Twin Cities. I remember the days of Minnesota Twins and Kirby Puckett when I think of that. Let's see, SCTPC, Melbourne, Australia. How you doing? Good day, good morning. Glad you could make it all the way from Australia. I know there's some of you from New Zealand as well. Some of you guys from the States. Polynesian Pip, would that be Hawaii as well? So it's good seeing you guys. So once again, if you are new to this channel or have not already done so, don't forget to subscribe. Click on the bell to be notified on updates and give us a thumbs up. If you like what we do, we appreciate your support. That really helps us out. And again, you can find us on social media. Our website is silverbullion.com.sg, SG for Singapore. Facebook, we're Silver Bullion SG. Twitter, Silver Bullion PL, PL for private limited. If you want just the audio versions, bit.ly, bit.ly/SBTV iTunes or /SBTV Spotify. And join our crisis tracker group. If you have a Telegram app on your phone, go ahead and join our group, Crisis Tracker, where we post events that affect the economy or things like gold and silver. And, we're pretty frequent with our posting, at least a couple a day, just to keep everyone up to speed, including us. So taking a look again at the chat board, we have, let's see, Dino D. How you doing? From New York. Beer Guy, Oregon. Great. Your Ducks, they beat the Utes for the Pac-12 championship, right? I believe. Yep, Polynesian Pip, Hawaii. Okay, great. Okay, let's see. Zombie Head, Illinois. Illinois, land of Lincoln. Trying to imagine Lincoln with Zombie Head. Somehow they don't kind of associate with each other, but it's pretty cool. Oh, Ron Miz, Kealakekua, Hawaii. Cool. I didn't know you're from the Big Island. So aloha. Thanks for tuning in. Pablo Pina, how are you doing? I'm okay. Always busy, but other than that, okay. It's good to be here with you guys. So, a few interesting things. I mean, I think, as you know, we always go ahead and start with some news items, but this time around, I need your help. We'd like to make a Christmas program, kind of like what we did last year. Vincent and I. Vincent is my colleague who really is the backbone of what we do. Appreciate his all the work that he does, but we need your help. We'd like to do a Christmas program, and if you guys could, can you let us know what got you started in precious metals? What makes you passionate about precious metals? Maybe you have a story about precious metals that you'd like to share, or maybe even send a photo of your stack, or let us know which is your favorite coin or bar, and you can send these to sbtv at silverbullion.com.sg, and then we'll, of course, we'll go through it. We'll go through everyone, and then we'd like to go ahead and put together some type of a Christmas program for you folks. So time's getting a bit tight, so we hope you can do that for us. Also, we're going to get Craig Hemke later this month to help walk us through the COT report, the Commitment of Traders report. I know we hear it all the time, but I think for the most part, I'm going to say we may not be that familiar or quite understand it as much as we should or want to. So Craig is going to help us out. So if you have questions regarding that Commitment of Traders report, again, go ahead and either let us know in the community group or email them to us at sbtv at silverbullion.com.sg, and then we can forward those to Craig, and we can try and put together something to get that Commitment of Traders report a little bit more understood. Okay, so going back to the chat box, British Columbia, how you doing? That's quite a ways away as well. Giuseppe, how you doing? Raw Image Barber, Savannah, Georgia. Okay, that's also a ways away. Let's see, Canada. Okay, why don't you have a Reddit group, share pics, etc.? Giuseppe is asking that question. You know what? Maybe we should. I'll bring that up with Vincent and see what we can do. That's not a bad idea. Let's see. It looks like volume is ramping up big time. Last time I looked, volume getting too loud. Let me know if it is. I can make that adjustment. So yeah, again, as mentioned, we'll be doing a Christmas video. So we do hope you folks can just help us out a little bit with that. Thomas Toops, how you doing? RR Washington State. Let's see, Steve, Beaver State Plumbing. Can't wait to see this false economy crash and burn. Yeah, I think there's a lot of unrest in the world right now. A lot of people are unhappy with policies, government policies. They're basically, they just seem to want these basic necessities in life, not overly wanting things, but people want things, and we're going to get into that. We're going to take a look at a quick look at Lebanon, and see what's going on there, and what their people are going through and seeing and saying. So first thing, as always, let's go ahead and take a look at our website and see what's going on with the gold and silver price. So this is our website, silverbullion.com.sg. US dollar, we're seeing silver at 1660. We're seeing gold at 1461. Not much movement since the markets opened in Asia this morning. Nickel 13,385. So nickel is still having I'm just gonna call it a headache. It's having a bit of a headache, but the demand is there. The demand for nickel is definitely there. So I'm still pretty positive as far as nickel goes. Taking a look at the silver gold ratio, we are at 88. It's that for me, that's surprising. I thought once we were at about the 85 level, 84, 83, I thought we'd be okay. But it's turned back around and heading back up 88, maybe 89. So we'll have to see how that goes. But again, there's a lot of things in the news, and seemingly it's like whatever Trump says. If the trade deal is looking good, we see the markets go up. We see gold and silver go down. If people feel like the trade deal is not happening, then we see the markets go down. We see gold and silver go up. So it's amazing. Any little thing coming out right now seems to affect the markets. I think even more than what's really happening in the real world, whether it's in the Middle East or with oil or conflicts, whatever it is. Because I remember a day, there was a day where if things happened, you would see gold and oil start to move. Today, you don't see it move like how you, excuse me, like how you once used to. So, we'll see again what happens with that. And don't forget, we do have our Silver Bullion Investor Kit, which is free for you. When you go to our website, you hover over storage, and there'll be a download investor kit here, which you can go ahead and click on. So let me get back to there. So our website storage, and then once you hover over this, you'll see download investor kit, and then it'll open up for you. You can either download it or you can glance through it. There's a few topics, actually quite a few topics. I think the more popular ones, again, as mentioned yesterday, are the P2P, how that program works, and even transferring your existing bullion into our Star Storage program. Because a lot of people they forget that they don't necessarily have to transfer the bullion. What they can do is sell it locally wherever they're at, avoid all the shipping fees, export, import fees, whatever it might be, and then they can go ahead and repurchase straight from the website and have it go straight into storage. So a lot of people they sometimes they overlook that, and it might be a better solution for them. So one of the things that came up last week was the Fed, and they like this word. I really don't particularly care for that word, symmetric. So the Fed's symmetric inflation approach may benefit markets even if consumer prices accelerate or price gains accelerate. The central bank is likely to keep rates lower for longer than anticipated. So that, I mean, this is a little bit unusual now. As the Federal Reserve prepares for its final monetary policy meeting of the year next week, a push to actually achieve target inflation on a symmetric basis is under active consideration by central bankers. Such a dovish shift would push the Fed toward embracing an even lower for longer interest rate policy following the next recession, whenever that happens. It's just odd that they're going to do this in preparation for the next recession, which means they're assuming there's going to be a recession. So, moreover, be aware of the potential for the Fed to start targeting an inflation rate exceeding 2% as soon as next year, providing more of a tailwind for the economy and financial markets than currently anticipated. Okay, the Fed's at it again, right? I thought the Fed's mandate was basically the dollar, price stability of the dollar, and also employment. But somehow they want to go ahead and set interest rates as well. I'm not entirely sure if that's within their mandate, but that's the world we live in today. The Fed seems to have a hand in everything, and although the Fed has a 2% symmetric inflation target, it does not attempt to generate symmetric inflation outcomes. What that means is that policy makers strive for an inflation rate of 2% over the medium term, but they don't attempt to make up for past misses. For example, if actual inflation were 2.5%, the Fed would not attempt to push inflation down to 1.5%. Instead, it would simply set policies such that inflation fell back down to 2%. Again, the Fed they're just hell bent trying to get that 2%, and now it seems they don't mind if they go a bit over. So I don't inflation, it's some people call it robbery, but you can it's you could actually call that robbery. Okay, James Richter, let's see, where'd you go? Okay, I'm not okay. Thomas Toops, have a big jar, just push for nickels. Yeah, why do they call them nickels anyway? Hey, good question. I mean, I know the metal content was nickel at one time. Um, wait, I sorry, could be wrong. You know what? That's a good question. We'll have to check out on that. Let's see. Thomas Toops, Patrick, as you know, that's because the PM markets and others are heavily manipulated. You know what, Thomas? I'd have to agree. Everything is. I shouldn't say everything, but a lot of things just aren't what they seem right now. And this is where we all have to kind of be aware and have our own personal shakedowns as to what's true, what's not true. What do people want you to believe? Why do they tell you look on the left when you should be looking on the right? So again, these are things that we have to always be aware of, and we need to take care of ourselves. We can't depend on governments or anything else. They're there, but you can't build your life to depend on them to take care of you. Okay, RR, full steam ahead. Okay, let's see. Joel Johnson, inflation is an invisible tax. Absolutely, absolutely. And this other article that I found, I is pretty interesting from Yahoo. It's a fairly new article. I think December 9th, so it just came out. For the first time, if you can believe this, for the first time in U.S. history, a decade will pass without the country falling into a recession. In every decade since the period immediately before the Civil War, the U.S. economy could be relied on to do one thing: tumble into a recession. But the American economy is on pace to defy that trend for the first time in nearly 170 years as it enters the 2020s. The 2010s would be the first time a decade has come and gone without the nation falling into recession, which is commonly defined as two consecutive quarters of contracting gross domestic product. Economists told Business Insider some supporting factors include the extremely slow recovery of people continuously looking for work. So these are the two guys that led us through this time period, 2010 to 2020. Article goes on to say in every decade since the period immediately before the Civil War, the U.S. economy could be relied on to do one thing: tumble into a recession. The last one stretched from December 2007 until June 2009, unleashing 18 months of massive job losses and historic rates of home foreclosures. The severe downturn also triggered a global financial crisis that some experts say contributed to the rise of authoritarian and populist leaders around the world. But the American economy is likely to defy that trend for the first time in nearly 170 years as it enters the 2020s. The 2010s will be the first time in a decade that has come and gone without the nation falling into a recession, which is commonly defined as, again, these two consecutive quarters of contracting gross domestic product. The close of the decade will cap an extraordinary period for the U.S. economy, one that saw it recover from the depths of the Great Recession and lock in a record interval of sustained growth. President Obama steered an economy on the verge of collapse and helped put it back on track, which has continued under President Trump. Business Insider spoke to three economists to see why the economy didn't spiral into recession in the 2010s. I think we kind of sort of read enough of that article. Um, so it seems like they give credit to the presidents. They don't acknowledge that the Federal Reserve had a hand to play in it. So I'm finding this article a bit hard to swallow. I'm pretty sure a lot of you are as well. Uh, it's that article is I think you can't say these two presidents steered through those times because again, central banks had a huge role to play as to why these recessions happen, and as to why these recessions subsided. So it's a little bit of a different viewpoint, I guess here. Let's see, Christy Fernando. These guys don't understand that it all happened at 0% interest rate for 10 years. Yeah, that's exactly the point, Christy, where the central banks held those interest rates down at zero for so long. It and we're going to, or we are starting to see the results of that. And it's definitely not over. It was patched over, but these patches, they're starting to again seemingly rip apart on the edges or at the seams, and that patch is going to come off, and we all know what's going to happen when it does come off. So that's a kind of an interesting article that Bloomberg had put out there. So anyway, another one, repo market is always in the news. This is again from Bloomberg, so maybe I should be hesitant to read this one. But anyway, the repo market blowup was fueled by big banks and hedge funds, the BIS says. So this September mayhem in the hang on September mayhem in the U.S. repo market suggests that there's a structural problem in this vital corner of finance, and the incident wasn't just a temporary hiccup, according to a new analysis from the Bank of International Settlements. This market, which relies heavily on just four big U.S. banks for funding, was upended in part because those firms now hold more of their liquid assets in treasuries relative to what they park at the Federal Reserve. Officials at the Basel-based institution concluded in a report released Sunday. That meant their ability to supply funding at short notice in repo markets was diminished. And hedge funds are financing more investments through repo, which appears to have compounded the strains. So this brings the BIS to the central bank, or the BIS, which is the central bank for central banks, into a controversy that has vexed observers for almost 3 months. Now, why did the repo markets get so bad so quickly? On September 17th, as we saw, the rates went up to almost 10%, where they should have been at around roughly 2%, and the Fed had to get involved. Many, including the Fed, concluded in the immediate aftermath that two transitory events collided. Investors used repo to finance the purchase of a large batch of newly auctioned treasuries at the same time that quarterly corporate tax payments drained liquidity from the markets. So this is the story. This is the story, and they're sticking to it. But the BIS doubts an ephemeral supply and demand imbalance is totally to blame. None of these temporary factors can fully explain the exceptional jump in repo rates. Fernando Avalos, Torsten Ehlers, and Benjamin Aaron wrote in the latest BIS quarterly review. So BIS is doubting what the central banks are saying. Reserves are cash that banks stash at the Fed, or the easiest asset for banks to tap when they want to quickly move money into repo. And it would have been logical for banks to pour cash into repo to get those 10% returns from an overnight loan. The four U.S. banks that dominate the market hold about 25% of reserves in the U.S. banking system, but 50%, half of the treasuries. That mismatch likely slowed the movement of cash into repo. So this is what the BIS is trying to say here. Let me go down a bit. JP Morgan CEO Jamie Dimon has put the blame on regulators. He said in October that his firm had the cash and willingness to calm short term funding markets, but liquidity rules for banks held it back. Okay, this part I find kind of interesting because, as you know, the other week when we talked about CLOs, a court had ordered that CLOs didn't have to fall under Dodd Frank, and so we're seeing CLOs just go astronomical. And here we see JP Morgan saying, you know what, if it wasn't regulated so harshly, we could have helped. So again, is this something else that's gonna, maybe another thing that's gonna be ruled on, that some things have to be rolled back again? I mean, it's just amazing that the banks, they seem to be able to set, dictate, or influence policy just about each and every time. Um, so I mean, for me anyway, that's the main point that I was getting from this article, was that maybe everything the Federal Reserve was telling us was not entirely the whole thing, and then banks are saying, hey, wait a minute, we can help if you just do these things for us. We can help. So I think we're starting to go into dangerous waters again if we're gonna go that road once more. Let's see. James Richter agreed. None your business. All hidden things will be brought out and exposed. That is true. That is true. Giuseppe, if you like chart analysis, compare silver chart to BTC. We are on the verge of a breakout in comparison to technical analysis before BTC made 127 times breakout. Giuseppe, I mean, charts. I think I'm not gonna say charts are entirely, you know charts have a place. Okay, looking at charts analysis, of course they have a place. Uh, For myself, though, understanding that gold and silver are manipulated, I don't tend to try to forecast from gold and silver price charts because if you have a manipulated price going in, how can you expect true data coming out? In other words, bad data going in, you're going to get bad data coming out or a bad forecast coming out. So I mean, but charts do have definitely have their place, but for myself, that's just the way I kind of see it. Bad data going in, you're going to get bad data or bad result coming out. But it's a good point though. It's a good point with the 127 times Bitcoin breakout. Absolutely a good point. James Richter, if gold hits 10,000, the nickels won't hurt. Inflation hedge or something fun for the kids. Absolutely, absolutely. Let's see. Uh, Mercy me, how is he still walking around free? Is that Jamie Jamie Diamond? Yeah. Well, his underlings are getting in trouble for manipulation, which we just touched on. Okay, let's see. Ride the curve, Patrick. Just like Reagan said in 1980, we're from the government and we're we're here to help. Oh my! Can you imagine that somebody come over to your house, knocks on your door, and says, "Hey, we're from the government. We'd like to help." I don't think so. I think your whole family's gonna run out the back door if that would happen. Okay. All right, the curfew is joke. Yeah. Okay, Fritz Bender, do you guys think prices will stay weak for a while? You know what? That's a good question, Fritz. Um, I'm kind of starting to see it. It really depends on whatever President Trump will tweet about the trade war. If he's tweeting positive things, yeah, stock markets are going to go up. Gold and silver are going to catch some headwinds. If he says, or if there's news that the trade war is not doing that great, or there's some kind of a speed bump or hiccup with it, then markets come down and gold and silver comes up. For some reason, we're kind of stuck in this box right now. I mean, at least that's kind of what I'm noticing. I think you folks are noticing that too, right? Whenever Trump tweets something out, then markets react, which of course, gold and silver will react as well. Let's see. Jacques born after 2008 technical analysis means is meaningless. Sorry. Yeah, Jacques, I agree with you there. The Fed, if they're not directly involved in equities markets buying up equities, they're at least helping those companies in some ways with the cheap money, or the banks with the cheap money. So, they are involved in that way. And as far as price discovery, I don't think you're getting true price discovery anymore. I don't think we're getting it in any market right now with true price discovery. So that's a good point as well. James Victor Jock, spot on. Yeah, absolutely agree. Let's see. Joel Johnson, RICO charges being slapped on J.P. Morgan, will get Diamond in jail. You know what? That'd be interesting if it went that far. That'd be pretty interesting. Joel Johnson. Okay, we'll remember that. We're going to remember that and see what happens. Okay, let's see. Yeah, ride the curve. I will have to find out how Nico was named. That's for sure. So okay, so let's This was also pretty interesting. It's fairly recent. Earlier this week or earlier last week, where corporate America, the debt load is nearing 10 trillion, if you can believe that. A record 47% of the overall economy, and experts around the world are sounding the alarm. All right. So here we go again. So for all you guys that say we're fear mongers, no, we're not. These are experts around the world, not us. Okay, so let's take a look at this. U.S. corporate debt has swelled to nearly 10 trillion. Corporate debt, we're talking CLOs again. Here we go. That comes out to roughly 47% of the overall economy, which is a record. Experts from the IMF, International Monetary Fund, to the trillion-dollar asset manager BlackRock, have warned of the risk posed by ballooning investment grade debt. So this is what we've been talking about for the past couple of weeks, right? Since 2008 financial crisis, companies have issued record levels of bonds to investors amid historically low interest rates. U.S. corporations are sitting on nearly 10 trillion in debt. That's equivalent to roughly 47% of the overall economy, a record, according to data cited by the Washington Post. We're getting all kinds of records, right? 10 years, no recession. Jeez. Since the financial crisis in 2008, corporations have splurged on debt amid historically cheap borrowing costs in recent months. Experts have warned that ballooning corporate debt could worsen a future economic downturn. I think that's a pretty interesting way he phrased it. Could worsen a future economic downturn. So economic downturn expected, and expected that it could worsen with these corporate debt. So here's what experts from the international, oh, sorry, read that one. Okay, so going down, as central banks around the world have loosened monetary policy over the past decade, corporations have felt encouraged to pursue financial risk taking, according to a report by the IMF published in October. The dynamic has made some systemically important economies more vulnerable to an economic slowdown. Corporate leverage can also amplify shocks, as corporate deleveraging could lead to depressed investment and higher unemployment, and corporate defaults could trigger losses and curb lending by banks, according to the IMF. In a recession half as severe as the 2008 crisis, corporate debt at risk, which is owned by firms that cannot cover interest expenses with their profits, could increase to 19 trillion, or almost 40% of total corporate debt in major economies. So they're getting kind of worried here. The trillion-dollar asset manager said in an October report that triple B rated bonds, the lowest bracket of investment grade debt, accounted for more than half of the market, compared with 17% in 2001. So again, these guys are looking for yield, so they are taking on a little bit more risky items. As demand for investment grade debt has grown, the credit worthiness of issuers has fallen. According to BlackRock, leverage levels are creeping toward the highest reading since 1992. The firm measured leverage using a ratio of debt minus cash and cash equivalents to 12-month EBITDA. We believe the sharp increase in the proportion of triple B rated constituents sorry, has made the investment grade bond sector riskier than in recent years, BlackRock wrote. Triple B rated bonds are typically the most vulnerable of all investments in recession, or investment grade debt in recession. If triple B rated bonds were downgraded, they would then be considered high yield debt or fallen angels, which would cause their value to fall. So again, CLOs kind of in the news. Interesting, you don't hear them say that word. Even in the other article, you don't hear CLO that much. But we know what it is, and we know what to look out for, right? Raul Duke, right before the crash in 1929, people were saying the markets could never go down, but boy, did they go down. Absolutely, absolutely, Raul. We're again, we're always being told, don't worry, this, that. But I think when they say don't worry, it's time to worry. And when they say, it's time to worry, it's too late to worry. So, again, I think, you guys who are buying gold and silver, you folks are absolutely doing the right thing. Um, some people feel like it's, they've been in it for a while. It's a terrible investment. They didn't get any return. They lost money. You know, true, may have been. But the thing is, and I tell people this from maybe 10 years ago, 12, 15 years ago, whatever it may be, gold and silver, it was seen as purely, I mean, it was an investment for sure, safe haven type of an asset. But now I think we're seeing a lot more people that are looking at it more as the insurance slash investment type of a deal. And I personally think they're right, because, it's sort of like because it's so liquid, you buy these assets, and if nothing happens, let's say the world is fine, it's so liquid where you can easily sell it, get your cash back, go ahead and reinvest. Whereas other things aren't that easy. But with gold and silver, it's one of the, I'll say it, one of the more perfect things. And if something does happen, you have your store of wealth aspect. So if something should happen with economies, fiat currencies, whatever it is, you have that gold and silver to go ahead and store the value or store your wealth and get you through those times. So it's almost one of those things. People like to say it's a no brainer. But so again, disclaimer though, this is not financial advice, professional or otherwise. So invest at your own risk type of a deal. So I mean, it's just a disclaimer, but I think we all know gold and silver is a good thing. It's where we should be at. Okay, let's see what else is going on with you guys. Let's see. Thomas Tubes, I will note that recently Putin said that the US dollar would greatly depreciate in the near future. Thomas Tubes, yeah, he did. He even used the word soon. Putin used the word soon. So what does he know that we don't? Probably a lot. So Putin did make those words or say those words. Let's see. PA bar, Pabar. Why are people saving dollars when they are just printing it? Well, that's I mean two things. One, why if you save it, you're going to lose value over time. That is true. On the other hand, if you keep the physical dollars, and I don't mean keep it in a bank, if you keep those physical dollars, it is going to come in very useful for you if things should really start to happen. And I say that because you got to imagine in the beginning of these types of crises, um, you know, there's bank runs, things like that. People are trying to get the cash, and again, as we mentioned, there's only so much physical cash printed. Most of the currency or the money floating around is digital, not physical. And this is the reason why, again, we're seeing even family offices who handle the very wealthy. They want cash. They want to hold the cash. So people are waking up to this or understanding this, that if that economies are a bit shaky right now, um, and it may be a good idea to hang on to your cash, because again, there's only so much physical cash that's actually out there compared to digital cash. And we're gonna touch on that, because when these things happens, things like capital controls, they do come into play. And we have President Trump, he's talking about devaluing the dollar just a bit. And well, just a bit, I'm not sure, but he's talking about devaluing the dollar. And there is a lesson to be learned from that when you do it. And I'll play this clip from when China tried to do this not that long ago, and this was the result they had when they tried to devalue their currency.
I would quickly take a step back to 2015, specifically mid-August, when the PBOC quote unquote devalued the renminbi. It was only a very minor 2 to 3% move, but it triggered a huge amounts of pressure on the currency and regional currencies and equity markets. It facilitated or triggered huge capital outflows from China. The government was forced to introduce very drastic capital controls over 2015, 2016 to stem this outflow of money from China and to stem the downward pressure on central bank reserves. So I would like to think that a very valuable lesson was learnt 3.5 years ago, and namely that is that if you start messing around with your currency, albeit by a few percentage points, you're potentially signaling something much bigger to the markets, and you may not be able to control the aftermath.
Yeah, so that was from Real Vision. All credit to them. So that's the thing, President Trump is talking about devaluing the dollar a bit to stay competitive. But you got to kind of imagine if he devalues the dollar, other countries would go ahead and devalue as well. So it could kind of open up the floodgates. But more importantly, what this gentleman mentioned was capital controls, and it's something maybe we don't think much about because it doesn't really happen to us, right? It happens to the other guys, not to us. But capital controls are very real, and it is something that governments turn to for various reasons. And so it's something I think we should be aware of is this possibility of capital controls coming in, or if we try to devalue, what will happen if we devalue? What's going to happen? What would you do? What would the very wealthy do? What would the average Joe do? Because I think we're all going to be doing different things if that devaluation actually comes into play. So this is what we want to take a look at today is capital controls, and this is what capital controls are.
Through capital controls, countries can try to limit or stop money from leaving, so capital outflows, as well as influence how much money enters the country, so capital inflows. Why would they do that? Well, one, they try to limit capital outflows because people get scared easily when things go wrong, like what happened after the Cyprus banking crisis in 2013. If, let's say, a major bank closes down in country A, many citizens will stop trusting the other country A banks and decide to perhaps move their deposits to foreign banks. This fear, especially given the fractional reserve nature of the banking system, can make other local banks insolvent, so countries try to restrict outflows by A. Penalizing them, for example through a tax, B. Placing a limit on how much capital can be moved out, C. Only allowing outflows under certain circumstances, like for meeting business obligations. D. Making it illegal altogether to move money out of the country, and so on. 2. They try to limit capital inflows because, for example, they're afraid of so-called speculative hot money. In other words, speculative capital that enters the country quickly but leaves just as quickly if problems appear, making those problems even worse. Countries can A. Ban short-term inflows, for example, Chile disallowing maturities below 24 months as of 1978. B. Penalizing inflows, something Chile did when reintroducing inflow controls in 1991 by forcing those that sent capital to make a 20% zero-interest reserve deposit. The list could go on and on. While capital controls can be part of a short-term damage control strategy for one country or another, things can get very tricky if everyone does it.
Things get very tricky if everyone does it. Couple of you guys hit it on the head. It's a race to the bottom. RR, Joel Johnson. Everyone else is losing value in their currency. They are running to the dollar. That's why it's strong. Yes, that's why it's strong, and that's what's kind of making it uncompetitive. Or what I mean when I say not competitive is U.S. products become a bit more expensive, so exports become a bit harder. And with the U.S. economy, the way it is, manufacturing has to be a big thing again. And the problem is, if the U.S. manufactures, their products are going to be too expensive, not just because of labor, but because of currency. So it's a big issue, and it's something you don't really hear that much of because, as I said, we all think capital controls happens to the other guys, not us. And as an example, over at Silver Bullion, we get quite a few of you folks out there. You make a purchase. You make a purchase of silver and gold, and you intend to keep it in storage. And so you go ahead and buy it on the website and send your money, and then you'll ask us in a couple days. You'll ask us, hey, what happened to the silver and gold? How come it's not showing up in my account? And we'll tell them we didn't receive your funds, and they need to check back with the bank. And a lot of times, the bank is the one that holds up the transfer of money. And we're already at that age where if a bank feels like, hey, you're sending too much money, or look, this guy, he's sending his money maybe to buy this or to buy that, and the bank doesn't like it, they hold it up, they stop it, they delay it, whatever it might be. And then they'll question you, what are you buying? It's your money. The banks go ahead and question you, so it's almost like you got you know an underlying piece of capital controls where the banks, they're going to question you. And I think a decade ago or so, it was almost like the banks were almost making you out to be like a criminal, and you didn't do anything, but you just want to spend your money, and they're deciding what you can spend your money on and what you can't. So we're heading to these times already, and it's something we need to be aware of. So let's see, Joel Johnson. It will turn into a race eventually. Yeah, that's the thing, Joel. I mean, if the dollar or President Trump tries to devalue, you gotta imagine other countries are going to devalue as well, and you're going to get that race to the bottom. Every country's currency is on a parachute, just kind of floating down, and what's going to happen. It, Again, this is where it would be a good idea to have, again, your silver and gold, because you're going to need to store the wealth of your currency in something as these currencies start to slide. And if they do, I think you could probably bet there's going to be capital controls that are going to come your way, that may be going to every country's way. So again, this is why we wanted to touch on this today, because you rarely hear about it. Ride the curve. Your discussion on capital control is important. Yes, it is. You're welcome. I hope we can do a good job or a good service for you folks. So okay, so we know what capital controls are. And one country going through capital controls today is Lebanon. So let's go ahead and take a look at Lebanon. Okay, so the title is How Unofficial Capital Controls Stop the Run on the Banks in Lebanon. Okay, this was in November, so about a month ago or so. Okay, so let's take a look at this article. Lebanon's banks were closed for 2 weeks due to the mass protests throughout the country. The banks opened last Friday. This was in November, so this is about a month ago. There was the expectation of a run on the banks and massive capital flight as expatriate Lebanese and foreigners withdrew their cash, but it didn't happen. It doesn't mean that all is well despite the repeated assurances of the banks. The central bank and the Association of Banks in Lebanon, the banks are playing fast and loose with the realities on the ground. Bank Audi, the largest bank in the country, tried to reassure investors in its weekly report. Lebanese banks succeeded on Friday the stress test as they ensured their customers' needs firmly and promptly. This is also attributed to the people's awareness and sense of responsibility, in addition to the high level of cooperation between banks, employees, and clients. This has helped sweep away all fears and rumors that reigned over the markets shortly before the banks reopened their doors. In fact, banks' clients became more aware about Lebanon's capability to face challenges. There was minimal awareness or responsibility by the bank's clients. Clients were not allowed to withdraw all their money, palmed off with being able to walk out of the bank with 2 to 3 thousand a day. That's a bit more than Cyprus. I think Cyprus was $60 a day or something like that. Anyway, neither were clients allowed to transfer significant amounts of money abroad. In fact, bank sources told me that if clients requested transfers, the bank would look more closely at a client's accounts to see whether funds were being withdrawn abroad or could put a stop to such activity. International bank transfers are not possible online. You can't have a run on the bank if you can't withdraw the money. Now, how true that is. So, the way I'm reading it right now is, if you start high, 2 to 3 thousand a day, I think people would, in general, feel a little bit more at ease than if it were $50 a day, right? If it's $50 a day, your people are going to be highly concerned. If it's 2 to 3 thousand a day, I think you would feel a little bit more relaxed. So I think that was a strategic move there. So going on, in fact, bank account holders outside of Lebanon are in a better position than those in Lebanon to withdraw funds in foreign currency, able to take out the minimum daily allowed 500 to 1,000 plus, although paying a transaction fee at the ATM and to the Lebanese bank. Few, if any, Lebanese banks are allowing ATM withdrawals in US dollars, just in Lebanese lira. Let's see, Lebanese want dollars, as while officially the lira is pegged to the US dollar. So this is what they want on the street, is they want dollars. Without dollars, you can't import goods. That was the reason why the banks opened again as the protests simmered down. The country was reportedly days away from running out of wheat, fuel, and other imported essentials. Okay, so this is what we're getting from this news article, counterpunch.org. But what about on the street? So I found this short clip about what's going on in the streets of Lebanon, especially with the young people.
So this ATM machine is completely spray painted. It's not working.
What is happening right now in Lebanon? Since I'm no expert on Lebanese politics, I decided to hit the streets and interview various locals to get their thoughts.
So in your own words, what's happening right now in Lebanon?
This is a true revolution now in Lebanon, and all the people from different areas, from different political parties are on the streets and demanding the right to have a proper education system, a proper healthcare, a proper government.
We're having a lot of problems here with the government. Like everything is just chaos.
Religion is here something amazing because we have many religions, but now it's a problem for us because they're using it so we can be against each other.
And how does it feel?
It feels amazing to have hope in our country, and I usually don't go to the gym, but I've been walking every day.
When you see all this happening behind you, how does it make you feel?
Really?
Can you see the goosebumps?
Such a great time to be Lebanese.
The Lebanese revolution, it is the best revolution ever made. All the varieties are there. Old, young, all the religions, all the political parties. This unity was never felt in years.
So far the Prime Minister has resigned, and now we are waiting the new government to be formed out of specialty people who understand what they are doing, and they do not follow any political parties.
So right now we're coming up to one of the marches or demonstrations. It's really cool. Everyone's decked out in Lebanese flags and very, very patriotic. It's a great atmosphere. So now we're inside the protest. Woo, yalla! What are they saying?
They want to overthrow the regime.
Thank you guys for watching this video. It's nothing more than just a short little documentary explaining what's happened. I'm not really taking any sides. I just wanted to meet with the people and hear what their thoughts are. And truth be told, as I told you before, Lebanon is one of my favorite countries in the world. I mean, look at this view right now. We road tripped up north to catch the sunset.
Okay, so I found that one to be pretty interesting because what we're seeing is a lot of young people, and they have wants, needs, demands, as we kind of sort of touched on in the beginning. Should this be a wake-up call for Europe and the U.S. if the youth rise up as they have done here in Lebanon and even in Hong Kong, let's say? What's the future going to look like? Because the young people today, they have needs, and they try to go about getting these needs in different ways from the ways that we've have done before. A lot of things, it's on the internet nowadays for them. In our time, we would tell one or two friends, and maybe they would tell a couple friends, and kind of get squashed there unless you went to a newspaper or something. But today with social media and younger people, very, very savvy using social media, they can make a trash fire, a wildfire in a heartbeat. And so this is something pretty concerning because they have different needs, they have different wants, education and whatnot. So it's my question is really, is this a wake-up call for Europe and the US? I mean, I know in the US we're already having young people, free college, free this, free that. Even politicians, saying we're going to give you $1,000 every month or whatever it is. So, these are all adding fuel to the fire of the younger people, which can in turn spread that fire, knowing how to use social media, and it's become a feelings world. Everything is about feelings nowadays. So, I'm just kind of curious as what your take on this, is. So let's see. Silver Patriot USA. I think it's the first time I've seen you here also. Welcome aboard. Government must be cut by 80 to 90% to have any future for the people. Yeah, I think government's gotten gotten too big. It it just keeps growing, and I don't think we need that big a government. And again, more governments you have, more government workers you need. Government workers that go in, then again, pensions. Can all these pensions get paid? Which is probably why they need to keep growing the government with people coming in because they need to fund the pensions for the people going out. And we know already how pensions are all, really, really getting into trouble nowadays. Another place, Lebanon, uh, in about the same region is Cyprus, and I just want to take a look back at Cyprus again because what we're kind of doing is we're going to go through different places, and then seeing if these things possibly could end up being, or happening within Europe and the U.S. So let's go a little bit back in time and take a look at Cyprus. So this one here, it's an article from the BBC, and 2013. So as I mentioned, it is going back in time a little bit. Cyprus crisis: what are capital controls, and why does it need them? Okay, why does Cyprus need them? Neither a borrower nor a lender. That was the recommendation given by the rather creepy Polonius to his son Laertes, who was about to head off to the temptations of Paris in the play Hamlet. Sage advice as it may appear, the truth is that each and every one of us is a lender, often without even realizing it, and our economy would not function nearly so well if that were not the case. That's because your bank account is a loan from you to your bank. Remember that, okay? I'll do it one more time. Your bank account is a loan from you to your bank. You may think of it as money akin to cash, one cash machine trip away from banknotes, but is nonetheless a loan. And as most of us are well aware by now, the bank takes this borrowed money and re-lends it to businesses and home buyers. But while you have the right to withdraw your money from the bank at a moment's notice, the bank, of course, does not have the right to demand that mortgage borrowers and companies repay the loans it has made at the drop of a hat. And this makes all banks vulnerable to sudden collapse because if everyone turned up one day and tried to empty their bank account, in other words, ask for their loans to be repaid, the money would not be there to repay them. It's an inherent vulnerability. Even a solvent bank, one that has made sensible loans and investments that will eventually be repaid in full, does not have the cash readily available to pay out even a fraction of its deposits. Fortunately, people don't normally do that. Indeed, a bank's very business is predicated on the fact that only a fairly predictable minority of its many depositors ask to withdraw their money from one day to the next. But occasionally, people do queue up outside the bank or empty their accounts electronically if they suddenly become afraid that the money in their bank account is no longer safe. It's what's known as a bank run. If the bank is solvent, which during a crisis can be near impossible to judge, then in most countries the central bank will throw it a lifeline, an emergency loan that will provide the requisite cash until the depositor panic subsides. That way, the cash machines of a healthy bank are guaranteed never to run empty. Precisely such fears over Cyprus banks have already led them to borrow some 9 billion euros of so called emergency liquidity assistance from their central bank and replace money withdrawn by more savvy depositors in recent months. But what if a bank is not solvent? For instance, if it has lent a bunch of money to the Greek government that will never be repaid in full. Gotta know your friends, guys. Know your friends. In that case, as the European Central Bank made clear last week, the bank could no longer rely on largesse from the central bank to keep its doors open. The central bank has no interest in making a loss on its emergency lending or in propping up banks that have no future. And this is where capital controls come in. Capital control is when the government tells you that you are no longer allowed to move your money around freely. Again, capital control is when the government tells you that you are no longer allowed to move your money freely. In this sense, Cyprus has already had capital controls in place for over a week because for over a week, again, this is the article a few years back, the government has declared special bank holidays during which the country's banks have been shuttered and there have been strict limits on how much people can withdraw each day from cash machines. The island's two biggest banks, Laiki Bank and Bank of Cyprus, have made such big losses on the loans they made that they probably no longer had enough money to repay all their depositors. Not now, not ever. So I think we're getting the point of this whole capital control thing, right? We're not going to be able to move our money freely, and we've seen this happen over time and time again in various countries throughout the world, which is why we're taking a look at the circumstances of countries throughout the world as to what led them to these different types of capital control. So I want to get back to your chat here. Let's see. uh Keep okay. Learn a trade; it will come in handy. Myself, I'm a bricklayer, Civil Patriot USA. Yeah, absolutely. If you got the time, learn a trade. For me, it was doing the electrical work. So I'm one of those old Sparky guys, right? If you need something, let me know. Just kidding. Okay, let's see. True, I prefer my beef over venison, but I don't deny your very legitimate position that you propose. Okay, so again, I guess that's self sustenance that you guys are talking about. Yeah, fish hunt, things like that. Absolutely. There's nothing wrong with knowing how to survive or handle yourself in a world where, let's say, these capital controls do take place, and you need to fend for yourself in a responsible way. So this was Cyprus, and again, taking a look back at Cyprus, I want to go through this video clip real quick.
Well, the controls were announced and passed through Parliament last week. The banks are supposed to open on Thursday. The problem is the document I have with me, which is the document that is on the desk of every bank manager in this country, is completely unclear about what the amounts will be. Every figure in this document has the word euro and two X's. But when I tell you what that refers to, you'll see how severe it is. First of all, at banks like the one behind me, customers will have a weekly withdrawal limit. We don't know what it is. They'll be prevented from cashing cheques. Certain banks that are stressed in terms of their own access to cash, there may even be, and this is what the directive says, there may even be the power to prevent debit and credit cards being used by bank customers except in transactions with other customers of that bank. Then you've got fixed term deposits. People put their money in the bank for 12 months, get to the end of 12 months, they're not allowed to draw it all out. Again, the X's give the detail. And finally, there's the issue of taking money out of the country. Again, another set of euro X's, we don't know how much, but there'll be a limit on how much cash Cypriots can take out. The problem is, we are just less than 2 days away from the moment where they have to open the doors of the bank behind me and all the other banks, and we have to know what this is. And there is frustration at the very top of banks in Cyprus about the fact that they just don't know what these new controls will be when they are finalised.
Yeah, so there you go. And I think he said Cyprus. So maybe my Cyprus pronunciation is wrong. Maybe it should be Cyprus. So Cyprus, which one do you prefer? But yeah, so what we saw there was, again, can you imagine that where, you have only a certain amount that maybe you can take out a day or whatever it is. You can't move your money around freely, and to take it a step further, we already know that the G20 has approved such items as bail-ins, so your money may not even be there for you. So I mean, again, these are all reasons why we need to kind of definitely take this one serious, where we already know that economies aren't really what they seem to be. We know that President Trump is talking about devaluing the dollar. China gave an example of what happens when you devalue. Capital controls start to set in, and we see places like Cyprus, Lebanon, what goes on when capital controls enter there. And I think you folks also remember Greece, which I want to touch on as well. Uh, Greece, I think, a few of us may remember this Greek crisis and what our capital controls. So Greek banks, they shut after Prime Minister Alexis Tsipras announced capital controls would take effect up to and including, well, it was for a certain date, meaning the amount of money people can withdraw from banks is going to be restricted. Take note, this article is 2015. So again, what we're doing is we're going back in time a bit just to understand when capital controls happen, why they happen, and what is it like after it happens, because we cannot rule out that capital controls will not affect us. We cannot only say this is for the other guys and not us, because I'm going to show you later on that there is a very real possibility of it affecting either Europe or the US. So individuals are allowed to take out a certain amount, 60 euros a day for this period, although they can bank online more freely. Geez, I would assume so, because that's the digital cash. It's not the physical cash, right? So digital cash, why not? You can move it around. But the physical, that's a different story. So this is what we talk about, where there's only so much physical cash printed compared to the digital. And it's why we're seeing people wanting to hold the physical. So moving on. This move follows the European Central Bank's announcement that there would be no increase in emergency funding for Greece and lending would be kept at the level set at that time, which means a government can use capital controls to order its banks to impose strict limits on daily withdrawals and overseas transfers of cash. It can also impose other measures such as limiting foreign exchange transactions. They don't want you to leave their currency. They want you to stay in the home currency. In this case, it would be to prevent euros flowing out of Greek banks to overseas banks into a different country. Well, there you go. They don't want that currency to leave or simply to be stashed under the mattress. Until now, the Greek government had been signaling that it did not want to introduce such restrictions. However, because the ECB's cash pipeline is frozen, the government has little choice. Credit and bank cards issued abroad can be used at cash machines freely, subject to queues and the amount of cash in them, so that visitors can continue to contribute to Greece's vital industry. Now, this part is kind of interesting, the amount of cash in them. Have you ever been in a place where you want to withdraw your cash and the ATM doesn't have it? I have. It's happened quite a few times. This was over in Philippines. It seems like every payday, it just seems like when it's payday, those ATMs run out of cash, and it's pretty amazing. You can't go to the bank on the weekend, and you can't get any cash from a ATM. So it is an issue. If you ever been to an ATM and can't take out any money, it's an issue. In any case, their money is not coming out of a Greek bank ultimately, but their own national bank account. So what are the restrictions? Well, the banks were closed. Cash machine withdrawals were limited to 60 euros per day. Card payments and online transactions in Greece were allowed, but not to accounts abroad. They want to keep the money in country. Tourists can use cash points if they use cards issued abroad. Pension payments not affected. Okay. Buses, trains, all free during this period. Okay, so that I guess you try to help the situation out just a little bit there. But I'll jump into this video real quick and move away from this webpage.
With bank deposits flowing out of Greece at a record pace amid doubts about its future in the euro, the government in Athens has closed banks, limited withdrawals, and halted transfers abroad. These restrictions, a last-ditch effort to keep euros in Greek banks, are called capital controls. A government can restrict withdrawals from banks, limit foreign exchange transactions, or tax stocks and bonds purchases. In a financial crisis, restrictions on outflows give policymakers some breathing space to fix problems in their economies. 37 countries have used capital controls to restrict the flow of money out of their economies between 1995 and 2010. Sometimes capital controls seem to work, sometimes not. In the 1990s, during the Asian financial crisis, Malaysia recovered swiftly after imposing restrictions. But so did Korea, without imposing restrictions. And controls are neither foolproof nor cost-free. In Greece, controls are keeping money in the country, but they also scare off investors. Right now, Greece is in desperate need of investment to jumpstart its economy. Options are limited. If the government let banks operate normally, the financial system would run out of money within days, with savers rushing to withdraw as much cash as possible. That would almost certainly push Greece out of the euro area. And if Greece does leave the eurozone, capital controls can stop the clock until the country manages to print a new currency.
Okay, so that's Greece. I want to quickly take a look at some of the conversation. Thomas Tubes, you need a all right. Well, we may know some for you if that's what you need. Just kidding there. Um, let's see. Let me go down these a bit. Sorry about that, guys. The vault doors are equally thick for both gold and silver in vault. Yeah, vault door. Okay, okay. I'm trying to follow that one. Sorry, I'm trying to refer to our vault, the safe house. Let's see. Pablo Pina. Trump recently tweet the World Bank is loaning money to China. Okay, you know what? I'll go and see if I can find that tweet from Trump. But I tell you what, the topic of China is another one. I mean, we saw smaller economies here, Cyprus, Greece, Lebanon, and I'm going to get to the top two, China and the U.S. A little bit of UK as well. So interesting, you bring up China. In fact, maybe I'll just go to it now. I was going to touch on Iceland also a bit, but we'll go to China since you've already mentioned that. So this was from the South China Morning Post. Okay, where China's capital outflow controls have gone to the extreme. Former central bank advisor says. Yu Yongding, a former advisor to the People's Bank of China, or PBOC, was unable to transfer 20,000 abroad after being told by an unnamed bank that he was too old. Sorry, sir, you can't send your money. You're too old. Okay, amazing, right? The case adds fresh evidence that China is tightening controls of personal purchases of US dollars despite a $50,000 personal allowance each year. Okay, so here we go. A former Chinese central bank advisor has admitted that Beijing's capital account controls may be too extreme after personally being blocked from sending US dollar funds abroad because he was too old. Yu Yongding, a senior research fellow at the Chinese Academy of Social Sciences, a state-owned think tank, told a financial forum in Beijing on Wednesday that he recently tried to exchange yuan for the value of US 20,000 at a bank and transfer the money out of China to pay for a trip to visit relatives living abroad. But the bank refused to provide the service even though Yu, like all citizens under Chinese law, is allowed to make foreign transfers of up to 50,000 US dollars each year. According to Yu, the bank refused to provide the service because he is over 65. I always support capital account controls and I always encourage such measures, but sometimes we tend to be too extreme in doing things, Yu was quoted as saying by Chinese news portal Sina.com. Legal foreign exchange deals are being hindered. The former People's Bank of China advisor confirmed that the incident in a phone call with the South China Morning Post, but he declined to elaborate further, declining to name the bank and only stating that the implementation of China's foreign exchange controls were too rigid. They were heavy outflow pressures in 2015, 2016, but I don't see clear signs of outflows at the moment. 2015, 2016, there were a lot of Chinese were going heavy into Bitcoin, trying to move money around. So they were using Bitcoin or crypto as a vehicle back then, if I recall. And but back to this article, an official at the State Administration of Foreign Exchange, or SAFE, the foreign exchange regulator under the central bank, suggested the problem may have arisen from the individual bank's policy, although no Chinese bank has published any regulation limiting of foreign exchange purchases based on age. In a statement replying a request by the Post, SAFE said it fully or it full guarantees true and legal foreign exchange uses by individual, and every Chinese citizen in China is entitled to the right to buy up to $50,000 worth of foreign exchanges in every year. So that's their story. And one of you folks had mentioned about China being assisted in some ways, and the other week, one of you also mentioned how banks were failing in China, and we're seeing they already had a bout of capital controls, and so there are quite a few things going on. But this is the story, or brief story about the banks, where this is a clip on a YouTube where one guy took a look at the three failing banks in China.
First, it was Baoshang Bank. Then it was Bank of Jinzhou. Now, it's Hengfeng Bank. This is the third bank failure in China in only 3 months. And they're getting bigger in size. Carl Bass is saying that the Chinese banking regulators have at least 500 banks flagged for potential collapse. A Chinese banking regulator admitted at the beginning of this year, and this was not covered in Western media, that there would be many bank failures, bailouts, and potential bank runs. He says that the mess is way more extensive than anyone's guess. According to the French investment bank Société Générale, the Chinese banks are looking down the barrel of a staggering $1.7 trillion worth of losses, which, to put this in perspective, that's the entire GDP of Australia. Imagine if every single person in Australia went to work for a whole year and took all that money and poured it down a big hole. And that's precisely the size of the losses that China is facing at the moment. Put another way, 60% of capital in China's banks is at risk as authorities start the delicate and dangerous process of reining in the debt-bloated and unprofitable state-owned enterprise, or SOE, sector. China is lending itself a large amount of money that it doesn't have, and more importantly, that its banks don't have. China's non-financial debt grew by more than 15% last year to a total of 250% of their GDP. More than 1/4 of Chinese state-owned firms are loss-making. About 40% of new credit goes towards financing interest on old loans. This essentially means that the stockpile of debt is growing exponentially. They're running, but not fast enough to keep up. China could lose as much as half of its banking capital if a crisis ensues, so China has a significant banking problem. China's financial system is quietly dealing with this major crisis. Although some of the activities are disclosed, they're underreported and largely downplayed. This is an attempt to prevent the eventual failure of the current financial system as it rots from the still lingering problems first highlighted in 2008. No country is immune. No domino will be left standing. In China this year, the third quarter was the worst quarter of 2019. In the economic data, we saw almost all our headline metrics fall. We saw almost all our key sectors fall. Manufacturing was the worst of these. You saw revenue and profits and pretty much everything that had been going relatively stable for a while fall in the third quarter.
Okay, so that's some pretty interesting stuff. So I forgot which one of you it was, but Thank you for bringing that to our attention. I think it was last week or the week before. Haven't really had a look to touch base on what's going on in China with you guys, but I don't know if it was the music in this video or what, but sounds pretty ominous, right? I mean, and you can't limit your thinking to just say it's only China. It's more than just China. A lot of countries, they are in depth. U.S. I think is probably not that far off, if not there already, with what's happening in China. So again, this is something we you know you don't hear much about because you always tend to think capital control is for the other guys. It's not for us, or it will never happen to us. So I'm gonna get a little bit closer to home now, probably for most of us, where we'll take a look at the UK. It's even a topic there where you know this one guy from the Independent, he took a look at how capital controls could soon return to the UK, and he's saying the first step requires a messy Brexit, an election, and a Labour Party victory. This was earlier in the year, 2019. So we're gonna see, how this thing is panning out so far. So the article starts off by saying, could the free flow of capital to and from Britain come to a sudden halt? Could exchange controls be imposed one night with little warning? Fanciful, not reality. How on earth could this happen? Here's how. The first step requires a messy Brexit. They're always trying to get the deal, right? Well, what if it's a messy Brexit? An election and a Labour Party victory, not completely out of the question. I trust you will agree. Next, a hard left dominated Labour government begins implementing key elements of their manifesto: nationalism of the railways first, mail services and public utilities to be determined, personal income taxes are raised, various forms of wealth taxes follow, foreign owners of UK property are targeted for additional levies, corporate taxes are increased sharply in one form of another or another. Shareholders in nationalized enterprises receive newly issued gilts or UK government bonds in exchange for their shares. Government determines the value of their shares. The consequences: UK bound international investment ceases, UK based businesses and individuals move money abroad, UK stock market tanks, sterling plummets, UK borrowing costs rise, inflation is forecast, gilt prices plunge, and with it the value that shareholders in now nationalized enterprises received in forced exchange for their shares. The Prime Minister calls an emergency session of the Cabinet following which he appears in front of November 10 to announce the following. Our country, he explains, is faced with a crisis. Unscrupulous businesses are transferring abroad the wealth of our nation, monies that were earned on the banks of the average citizen. The rich who profiteered from a rigid financial system are absconding with their ill-gotten gains. Okay, so that's it's kind of a fanciful. It's kind of a, uh, I guess he's just trying to see, what would it take for the UK to reach a point where capital controls would come into effect, and it's possible. I wouldn't say the UK is close at all by any measure to to take a look at capital controls, but I mean, with Brexit, you don't know. You don't know what's going to happen with Brexit, because you're going to get a lot of guys who are going to be feeling unsure or maybe even unsafe, and they're going to be looking to move things, or maybe looking to move things out. So you just don't know. We're going to have to, again, see what happens with this one. Uh, okay, let's see. Going back to some of the chat here. Okay, Thomas Soups, their problem again. It is small compared to China. Okay, hang on. Let's see. RR, isn't that nice? Government decides the value of your shares. Yeah, I mean, I can imagine in the U.S., we're going to get that president going to come to the podium one night, and he is going to tell us, we need you all to be patriots. Go ahead and move into these government bonds or whatever it's going to be. Be a patriot and do your duty. Take a cut in your pensions or whatever it is. Can't imagine. It's going to happen one night. President someone is going to come on that podium and he's going to tell us to be a patriot. So, I mean, might be laughing now, but I don't think we're going to be laughing at that time. But anyway, I think that's in the future what we're going to see one day. Let's see. I'm somewhat surprised that each bank in China doesn't have a few printing presses in their backroom vault. Well, it's very very centralized. I don't think the government would want to give the banks that type of freedom. You can imagine even in the U.S. or any country, I think if you keep a printing press in the back room of a bank, I think they're gonna run out of ink quicker than they expected to. I think it's gonna be too easy to go ahead and print money. Let's see. Crypto, Thomas Hoops, crypto have to be much easier to use before there will be widespread public adoption. Yeah, crypto, I think a lot of it also is, sometimes we may not understand it or we don't care to. I mean, there's a whole lot of various reasons, but I do know, going back to, I think about the time 2015-ish around there, um, a lot of Chinese were exchanging. Um, I'll just say they were buying crypto. They were trying to move money around in crypto, and that's one of the reasons why China had that crackdown for a while. I mean, you gotta imagine. Let's say you're at a casino, you want a bunch of money, and then let's say you don't want to. I don't know what it would be, whether they would give you the money or send the money to your bank, whatever it is. Um, you gotta imagine there's gonna be guys who are gonna say, I wanna use that to buy crypto or whatever it is, just because it's easier to move around. It's borderless basically, and that's one of the issues that I think governments are still trying to deal with when it comes to cryptocurrency. But back in that time period, about 2015, they were buying a lot of crypto, and it was to try and facilitate their movement of money a bit more freely. So what about the U.S.? Capital controls in the U.S. So take a look at this article. I'll go through it with you guys. This is from Forbes. This is a couple of years ago. Capital controls may be coming to the U.S. So this is a couple of years ago. March 16th. It's not that long after Trump physically set foot in office. So at that time there were a lot of uncertainties. So anyway, let's get into it. Those who hoped President Trump would tone down his protectionist rhetoric will be unnerved 6 weeks into his tenure. From his to his to his meeting with business CEOs. Okay, anyway, Trump has put trade front and center. So far, all is going well for the president. Markets are inching higher and inflationary forces have picked up. However, bringing back jobs and reducing the trade deficit would be a tougher task. A victim of his own success, Trump's election unleashed the animal spirits that have been absent post financial crisis. On the surface, this is good for the economy. The U.S. is currently the only major country raising interest rates and enjoying an uptick in inflation. Again, this is back in 2017 now. Trump's proposed fiscal stimulus and structural reforms have added to the optimism. Given all of this, the U.S. is now an attractive place for investors relative to global markets. This is still generally true. The huge inflows into U.S. equity markets since this election are evidence of this. But the influx of capital has created problems for Trump. The dollar's rise has cheapened import prices, while U.S. exports are now costlier for foreign buyers. A strong currency has weighed on GDP growth in the past and will do so again. These conditions could result in companies leaving the US rather than returning. So, this is why Trump is trying to get them back into the US. If the dollar continues its ascent, layoffs in export heavy industries could follow. That would be a major headache for Trump and will force him into action. To start, he said, this is back in 2017, there will be a massive border tax on imports. But a border tax may be just the beginning. If it fails to stem offshoring, it's possible that capital controls could be enacted. As Trump was elected on an America First platform, that idea would likely gain public support. If controls are introduced, how could they affect U.S. citizens? Capital punishment. Although restrictions seem unlikely, Trump has already talked about curbing cross border money flows from certain sources. In 2016, Trump said he would look into tightening rules on wire transfer firms, requiring them to verify whether their clients were U.S. residents. These comments were made in regard to blocking overseas remittances sent by illegals. These curbs may seem to be limited at first, but they could easily be expanded once launched. The Fed and IMF have backed the use of capital controls in certain situations. Officially, the U.S. has opposed them since Bretton Woods, but judging by President Trump's actions, America is on a new path. Trump could enact such measures under the guise of protecting jobs. Again, this is being a good patriot, right? The controls would limit the ability of citizens to move funds in and out of the country and could be subject to caps that the U.S. residents send overseas every year would also be watched closely. I think that part is already in there because, like I said, we get banks who do stop money transfers. Businesses could see restrictions imposed imposed on their foreign transactions. This would severely disrupt supply chains, forcing many firms to pivot to U.S. suppliers. As foreign suppliers are often cheaper, it could hurt anemic U.S. corporate profits. Controls would differ from those that restrict outflows, which are now in place in Greece and China. U.S. controls would also have to cover inflows and might be similar to those of Chile back in the 1990s. If such controls become a reality, it would set a dangerous precedent. The government would be empowered to make arbitrary rulings on whether certain transfers are endangering U.S. jobs. It would politicize the economy, rewarding patriotic, there's that word again, rewarding patriotic firms and punishing others. So, I mean, what's your take on that? Is it possible U.S. may enter a period of capital controls? I mean, from what this author wrote, it does seem to be in line with what President Trump is trying to do with an America First policy. Now, again, this is not bashing President Trump in any way. It's just to say, these are his policies. He's trying to set us on this path, and if certain things pan or certain things don't pan out, then would capital controls be an option where it it may be an option that could come to the US. So I'm curious, how do you folks feel about that? Okay, let's see. Okay, some of your the chat here. RR International Mafia would like the SDR to be the new world reserve currency. Well, they're not going to let it go. I mean, they've put a lot of time into that SDR, so don't count on them relinquishing that SDR so easily. And I do think they are already looking at some type of IMF type of a crypto deal. So they're not going to give up. That they worked too long, too hard on that SDR, and I do think these guys are looking at some type of a global type of a currency as well. So I'd go with you there. Uh, Thomas Hoops, Americans, including myself to a degree, are lazy and want things to be easy. Yeah, Thomas, that's true. I mean, I give you an example. First time I had taken a trip to Philippines back in 2002, I think it was. I was amazed to learn that there's no such thing as social security, no such thing as welfare, none of that stuff. You fend for yourself. You have to fend for yourself. You can't rely on much government assistance, and that kind of blew me away because when you grow up in the states, to a certain degree, the government's going to take care of you. But when you go to other countries, you really see you're on your own. You need to take care of yourself, and I think if that kind of a mentality were, let's say we made a U-turn, and that kind of mentality had to be had in the U.S., I think a lot of people would really not be able to cope with it or understand because we've been given so many free things for so long. So that's a good point that you brought up. Let's see. My name is Nobody. How you doing, Nobody? What's up, Andrew? Cheers from Florida. Keep absolutely, my friend. Keep stacking. That is the one thing, one of the many things you want to do. Keep stacking, even though silver and gold takes a hit every now and then. Remember, we're not buying it 100% as an investment. We're buying it because it can help us out through so many other things, and that's the key. When you understand gold and silver, you understand it beyond just the price point, beyond just the investment type of a thing. So, this is something the more we learn about gold and silver, what it can do, and the more we learn about the world, politics, geopolitics, events that are happening, the more you realize how you can plug in gold and silver to just about anything that's happening, and it's to your advantage to have it. Once you start plugging it in, this event, that event, geopolitics here, there, you start to see how it stacks up in your favor. It's not just for an investment alone, and you guys know that. A lot of you guys already know that, so I don't really need to say that. But if you are new, definitely understand that it's more than just an investment. So I'm glad you folks really know that. RR, cradle to grave socialism in the U.S. Yeah, there's a touch of it in the U.S. The banks got what they wanted, eliminated rugged individualism and self-reliance. It's no mistake or accident. We've been conditioned to be helpless. Yeah, the incentive a lot of times is to not work. If you give people an incentive to not work, they are going to not work. Union. I remember when I was back in the union. I mean, we had guys who would they would look to get laid off. They want to take a little bit of a vacation, go ahead and get laid off, and don't worry about finding a job because you just go back to the union hall, sign the books, and then they start picking guys in order to go back out to work. So, yeah, I know what you mean. We've a lot of people had a lot of holidays back then, and I'm sure they still do. Um, you still got to have that drive, and I think all of these safety nets kind of for some people it's a reassurance. For some people it's a way of life. They are going to soak up and suck up all of that benefits, and you know kind of sort of lose that drive just a little. So some of you guys are talking about cryptos. um Pretty interesting. So I want to go into this article of all places, Bitcoin. I believe it's from bitcoin.com. um Sorry, wait, hang on. Sorry, this is zero hedge. Sorry about that. uh US regulators warn stablecoin adoption could disrupt economy. Okay. So, a panel of senior financial regulators in the US has warned the public about the purported risk of stablecoins and their cryptocurrency. A report issued earlier this month by the Financial Stability Oversight Council highlighted potential problems resulting from stablecoins gaining wider recognition. FSOC was set up in 2008 to combat risks to the financial sector after the financial crisis. Well, this is about the same period that Bitcoin was created, right? For almost the exact same reasons. The panel is headed by United States Secretary of Treasury Stephen Mnuchin. Its voting members include Jay Clayton, the chairman of Securities and Exchange Commission, as well as Heath Tarbert, who recently took over as chairman of the Commodity Futures Trading Commission. So in their report, they stated that if a stablecoin became widely adopted as a means of payment or store of value, disruptions to the stablecoin system could affect the wider economy. Financial regulators should review existing planned digital asset arrangements and their risks as appropriate. Okay, that's pretty interesting because I'm just gonna say this. It means capital controls will not work because people are in crypto and all these plans that they have to control your money, they can't use them anymore. So here they are writing this report about how stablecoins can basically be a challenge to what they want to do or implement. That's kind of sort of how I read it. It wasn't a very long article. It didn't go much further than that. So that was the takeaway that I got from that article where it says stablecoins could affect the wider economy. I do think stablecoins are going to have a pretty good impact on our economy, on what we use as currency anyway. But again, I think this is just something where the powers that be, the banks, governments, whatever it is, you know, when you look at countries who have to implement capital controls, because there is a chance you will have to do it at some point. If people are in crypto, now how do you control that? You can't control the flow of money if people are in crypto, and especially these stable coins, which in my view are especially backed by gold, probably are where things are going to be headed to one day. So my opinion, that's why they are concerned about about crypto. So I mean, getting back to some of your chat, sorry about that. Pablo Pina, I wonder if there'll be unions when industry becomes more robotic. Shouldn't unions be fighting this? Yeah, I think for some industries, you very very hard to automate, but for other industries, very easy, very easily automated. I mean, just look at the United Auto Workers. I mean, how much of that industry is already robot? And if you can imagine if they shift over to, let's say, electric vehicles, less moving parts in the car, less people are going to have to be employed. So, there are industries that hugely are going to be affected by robots. That $15 an hour minimum wage, you go to fast food places today, there's a computer kiosk. You order what you want, then you go and get your food from the counter. So, even there, again, you're seeing how automation is taking over a lot of aspects in our life. And even with trading bots, you know AI making trades, pushing prices around, up, down, whatever it is, um, high frequency trading algorithms, all of these things, it's already controlling our economy if you really look at it from that perspective, which is a bit frightening. You can't imagine some AI, making a decision, for capital controls, if you can move your money around or not, or AI being some kind of a judge where it's entirely black or white. It's already heading to that point, and it's absolutely concerning for sure. One more thing though, it mentioned how the U.S. had opposed capital controls um, from the time of Bretton Woods. So let me just quickly go here. This is a article from the IMF. It's a working paper from the IMF. The Bretton Woods era, beyond its intrinsic interest, the interwar period is important because of the way it shaped thinking at the Bretton Woods Conference in July of 1944. Delegates of 44 nations gathered to design a new international monetary system that would bring order to the interwar economic chaos. The lesson that the main protagonist at the conference, John, the lesson that the main protagonists at the conference, John Maynard Keynes and Harry Dexter White, took from the interwar experience was that a regime of unfettered capital flows is fundamentally inconsistent with the macroeconomic management increasingly expected of governments uh, talking about hot money and things like that. Let me go down a bit. Keynes and White thus envisit in well basically envisages capital controls as a structural element of the international financial landscape rather than as just temporary or transitional measures. They also realize that capital controls would not be effective unless applied at both ends of the transaction, and the original plans therefore mandated IMF member countries to cooperate in enforcing each other's measures, partly in lieu of more draconian exchange restrictions that they thought would be necessary to make unilateral controls effective. Essentially, what they are saying is, if you're a member of the IMF, you gotta kind of help your other IMF partner out. Um, so a prominent example of capital controls in that period is Britain. Following a disastrous dash to convertibility in 1947, which ended within 6 weeks with a run on the pound sterling, Britain imposed strict controls on capital outflows that were maintained until 1979. Let me go down a bit. It is worth noting, however, that despite U.S. resistance to control capital inflows, the U.S. Federal Reserve and Treasury agreed in 1949 to help the Bank of England defend the pound by cracking down on sterling transactions in the New York foreign exchange markets, which were illegal under British exchange controls. Now, that's pretty significant because one country may be having capital controls and other countries may assist in some sense. So, where do you go from there? Where really do you go from there? What do you think the US or the world for that matter will look like if capital controls actually become a policy, and what are you going to do? So we see, Trump wants to devalue. We saw what happened with China. Um, Capital controls were basically imposed, they had to come into play. We see articles like this from the IMF where they say, members, they need to help each other out here. So what do you do? How are you going to move your money around if you need to move it around? You're going to be stuck. There's only a few things that you can do, and one of them for today anyway does look to be crypto. And another thing again, you know, is gold and silver. And why I say that is because, excuse me, when you get to a point where you have to impose capital controls, again, in this case, let's say with the US, if it devalues, capital controls come into play. The key word is devalues, which means your money, your currency becomes worth less and less and less and less. And again, this is the reason why you want to go into items like gold and silver, because they are going to store the value of your wealth. Even if capital controls do come into play, the other half of it is you need to store the value of what you have. So, I mean, there's actually two things going on with capital controls. You may or may not be able to move it. You may not be restricted in some ways, but chances are if capital controls are happening, it's because something's going on with your currency. So you want to also make sure that you store the value of your wealth in an item like gold and silver that historically has proven time and time again to be that store of value. So take a look at more of your chat before we head out. Um, let's see. Thomas Toops, I would very much trust Singapore. Yeah, Singapore, I tell you what, it's pretty much no nonsense. You don't get all the riffraff that you typically would get from a government. It's pretty straightforward, no nonsense. It is what it is, and that's no real, not too much gray areas. So that's I think that's one of the good things about Singapore. Let's see more of your questions. Like I said, they will guarantee Bitcoin success. DJ Crazy, they keep if governments and banks keep doing what they're doing, they are going to inadvertently push people more and more and more into cryptos. The ones that are waking up to what they're doing and why they're doing it, they're going to push people into crypto. They're going to push people into probably asset-backed cryptos, if not stable coin type of cryptos, or if not even gold and silver itself. So guys who are waking up are already seeing this, and they're understanding. You know what? It's not just the investment quality anymore. I'm looking for the store of wealth quality. I'm looking for the being able to transfer things here, there, all over the world type of crypto. I mean, it's the reason why they're looking at crypto, because it's easily transferable anywhere in the world. It's borderless. You can move it across borders, no problem. So again, that's another reason why crypto is it should be on your radar. I know we're gold and silver guys, but you got to look at things like capital control as well, and understand if you need to move something really quick to get from A to B and out of the country or whatever it is. Um, for your own family safety or welfare or well-being, then crypto is a solution. You can't deny that. As much as we like gold and silver, crypto is a solution at that point. But the store value solution, I would still say take crypto. I mean, I would still take gold and silver over crypto. So you got kind of two components there: the store value, gold and silver, the portability, crypto, and that's where you kind of like the idea of that stable coin, that gold backed crypto. That's the reason why I do look at gold backed crypto, and it's not a bad idea if you take a look at it as well. A few more questions. Let's see. Gold backed crypto. Yeah, there are a few, quite a bit gold backed cryptos coming on the market, but each of them have some things. They have some things that may fit what you're looking for, and they have some things that absolutely might not fit what you're looking for. And that's where you gotta kind of dig deep and see which gold backed crypto is suitable for you. um, that one is up to each different person. Candy, if silver were fairly valued, wouldn't surprise me to be on par with gold's price right now. I've heard guys that say 1-to-1 ratio. I'd be happy if that were to happen, but not yet. Need to get more more silver while it's still cheap compared to gold. But yeah, I've heard that story too. 1-to-1. I've heard 10-to-1. Miners are telling us coming out the ground 9-to-1. So, compared to gold, silver definitely is undervalued. If you look at the mining ratio, it's definitely undervalued. But I think by all metrics, it's undervalued. And well, I mean, we've been saying silver's a good store of value, but there's also that the investment side that lures us to the metals. Well, anyway, a few more questions. Let's see. Alan Greenspan is Satoshi Nakamoto. Yeah, that's what I thought too. No, no, just kidding. I've heard that theory as well. Alan Greenspan is Satoshi Nakamoto. Yeah, you never know. I think he created algos, right? It was Alan Greenspan that had a role to play in that. Let's see. Are no gold standard yet with gold backed cryptos? Okay. Okay. So I think that I'll wrap it up for now. We gotta head out and do some other work. But again, the main focus of this live stream today was capital controls, and we can't necessarily only stop to think, as I said before, it only happens to the other guys. It only happens to smaller economies. It happens to big economies as well. And the way things are going, you know, as President Trump has mentioned, the dollar is strong relative to other countries right now, or U.S. economy is doing good relative to other countries. Dollar is strong relative to other currencies right now. Um, if it does have to devalue somewhat for the U.S. to become a bit more competitive, people are going to start to look to move things around, assets or whatever it may be, and you cannot rule out capital controls, and you cannot rule out this whole be a good patriot type of a scenario. You just don't know. And so again, this is where gold and silver plugs into so many different things, as as a forerunner, even as a shield to what might happen, what could happen. And it's something I do hope you guys really take a good look at. I know price is one thing. Price goes down, we feel bad. Price goes up, we feel like we should get more, or we should have got more, whatever it might be. But it's much more than price. And again, I think you guys know that. So just keep focused. Um, keep paying attention to what they're telling us. If they tell us look to the right, be sure to look to the left. You can't take everything at face value anymore. Um, that's just the way it is right now. But anyway, I'll better let you guys go. We've been here almost a couple hours already. Geez, sorry about that. But you guys have a good evening wherever you might be. If you're going to turn in, if you're watching me and you're in Asia, you should be working by now. So better let you go as well. So you guys take care. We'll be back next week. Capital controls. It's can be a strange thought, but it's something we still do need to think about. So anyway, you folks take care. Send in your photos, stories, and whatnot. Once again, I remember sbtv at silverbullying.com.sg as we talked about in the beginning. And you folks have a Merry Christmas coming up ahead and take care of each other. Till then, we'll see you next week. And remember to saddle up for what's coming ahead and silver up. We'll see you next week. Take care, everyone.